Hello my fellow freedom builders and welcome back to the channel. Today it's time for another episode in the Indicator School series. Last time we had the RSI and today we're going to talk about one of the most widely used indicators called the MACD. MACD is I guess in every single charting software and charting package I've seen in the world. So if you're sitting with some software that do not provide MACD, I suggest that you shift your software provider. So MACD is pretty much known among all technical analysts all over the world. MACD is not the name of the restaurant, it is actually short for Moving Average Convergence Divergence. I have no idea why they picked that, or we can have a look at that today because there are some moving parts in here. But I understand why they chose a short MACD for it, because the other thing would be pretty much impossible to talk about. Alright, today we're going to talk about some basics of MACD. We're going to talk about the basic MACD line, how that is calculated. That is the basis of all the indicator. We're going to talk about the signal line, the histogram. These are the three moving parts in the MACD indicator. Then we're going to talk about how to get some trading signals out of this. We're going to talk about the cross of the 50 line, cross of signal line, and some divergence. And down here in point 4, I'm going to show you a couple of neat small tricks and tips for TradingView. So even though you know the MACD, then watch till the end, because I'm going to show you a couple of small tricks here. Alright, let's go straight to the chart to see how to work with the MACD. I've chosen Apple here on a daily chart, but this can be used on any time frame, on any stock. And what we can see here is we have the normal candlestick chart here. Then we have two moving averages, exponential moving averages. And I'll get back to the moving averages in another video, but all you need to know right now is that this is a 12 period and the orange here is, the orange here is a 26. These are the default settings, 12 and 26. Why the inventor, Jared Appel, chose these, I'm not completely sure, and you can experiment with them. But right now we are working with 12 and 26. Now down here we have the MACD indicator, and right now it's just a raw MACD line here, and we have the zero line here. Now, what MACD is meant to be, it is meant to be a measure of trend strength. So what it actually does is it measures the difference or the distance between these two moving averages. So when a trend is moving up quickly, what happens is that the fastest moving average here it is the 12 period. This one moves up the quickest because it is most adaptive to the current price. The slower moving average moves, of course, a bit slower, and therefore in a strong uptrend we'll see that the short-term moving average is moving quickly and the slow moving average is moving a bit slower, meaning that the distance between them goes up, as you can see here. Now this is exactly what we can see down here. It is that when the price is moving up in a speed where these two moving averages are moving apart, then we can see that this line rises. So at this point in time the MACD is just around a 10, meaning that there is $10 in difference here from around 301 up to 311. That is fine enough, meaning that we have a $10 difference, and we can see that it is flattening a bit out. That's also what we can see here. The distance between the two moving averages are pretty much the same here. Now when the short moving average is below the long moving average, the MACD line is below the zero midline here, and you can see that the exact point where they're crossing here is also the point that the MACD line is crossing down on the zero line here, and up here we can see that the exact point where the two moving averages are crossing each other the other way, we can see that the MACD line is crossing the zero line here. This is, some people want to say, well, we're just trading with the MACD, and whenever it crosses the 50 line, we can take a buy. That would be the same as saying we are just trading moving averages crossover, and that is not, there are at least not many cases where that is the best way to trade. But as you can see, the MACD is doing a fine job in telling us when the trend is good and solid and stable, and when it goes down here, we of course go short or take our long position off. Now, Apple is a very nice candidate to show this on because it is a very trendy or trending stock. We could easily find some other candidates that were more sideways and choppy, and in that case we would see a lot of false signals. But right now we can see that on Apple it is working fairly well. Now, as I mentioned to you here, this is just the basic MACD line. We have two other components that we need to look at, and the first one is the signal line. And the signal line right now, I just removed it by making that a 1 here, but the signal line in default is 9 periods, and what that is, you can see it here. What you need to focus on right now is the orange line here. That is what is called the signal line. The signal line is simply just a 9 period moving average on the MACD line. So it's not a moving average on the price, it is a moving average on the MACD line. So at this point in time, this score is the average of the last 9 periods on the MACD line here. So the signal line, I hope you can see already, is actually fairly okay, a fairly okay tool to detect if something is shifting here. We do have some sideways movement here, meaning that the MACD is dropping. Doesn't mean that the price is dropping, it's just that the distance between the two moving averages are they're getting a bit closer, and therefore the moving average, the MACD is dropping here. But as soon as the price starts to speed up again, we can see a cross of the MACD and the signal line, meaning that we would enter around here. We would then take our profit here, and we would enter again here. And as I said, Apple is a very it is a bit deceptive to look at this, because we get a feeling that the MACD with the signal line is just some sort of magic stuff that can keep us in the long run and keep us out of losses. But we can have a look at a stock, or maybe we can even find somewhere here on as soon as the stock goes a bit sideways, you can see we are pretty much getting chopped off. We are buying here, then we are selling and buying and selling and buying, and you can see that you'll simply get killed in cost when trading, and in spread, and all of the cost we have when we are trading. So this is not just some sort of simple magic. As soon as the stock is moving sideways, we are simply getting chopped with this sideways movement. All right, that was a signal line. Then we have our third part, and that is the histogram. And a histogram is these bars you can see down here. And the histogram is simply, and now I know it's getting a bit complicated. You do remember that the MACD was just the difference between these two moving averages. The signal line here, that was the MACD line. The signal line is the moving average on the MACD line. Now the histogram is the difference, as well as we did here before with the difference between the two moving averages. The histogram is the difference between the MACD and the signal line. So as we can see here, as soon as the MACD is crossing up here, we are getting positive bars on the histogram. And as soon as the MACD is crossing down below its signal line, we're getting negative scores on the red bars down here. And I'll get back to that later as to how it might be possible to trade that. Okay, so we have these three moving parts. We have the MACD line, we have the signal line, and we have the histogram. And that are the parts you need to know about when we are looking at different trading signals. Now, as I mentioned before, there are some different trading ways you can trade here, or you can get your trading signals. This is the cross of the 50 line. I already mentioned that. And as I said, it can look deceptively easy to trade off, but as soon as we get down to some choppy areas, we are getting bought and sold in and out of the stock pretty quickly. And therefore, I do not recommend that you just take a simple EMA crossover approach. At least you need to be very careful and have it back tested quite thoroughly. Then there is the cross of the signal line. Now, that might be a bit of a better way to trade. You can put some extra filters in. You can combine all sorts of different indicators. And also do remember, as I said in the RSI video last time, that an indicator is not a magic tool. An indicator does exactly what the name tells us. It indicates. So this indicates that we are going into a trend right now. But we need, of course, some other confirmations, or we need to have done some fundamental analysis on the company, or we need to have a positive bias of the overall market on the sector and so on. And then the MACD can actually be a fairly good tool to use. Now, the other part here, let's have it here, is the divergence. And there are actually two different types of divergence we can work with when we are talking about the MACD. As you might remember last time, the divergence means that we are getting two different signals. We are getting a signal with higher tops and higher bottoms here, higher tops on the stock price, but we are getting lower tops on the MACD. And when we start to see that, well, it actually just means that the trend is taking a bit of a break, and we do not know if it will completely turn around. Of course, it is easy to see here because, well, we have the benefit of some hindsight here. But when we look at some other instances here, let's see if we can find some of them. We can see one here with higher tops here and lower tops here, and that resulted in a turn down here. And that is the way you look at divergence. You are simply finding some pretty clear higher tops and some lower tops here. But then again, you can find that all over the place, and that is the bad part with technical analysis, because often you tend to see what your bias is already telling you, that maybe you're thinking that Apple should be a bit in a retracement, and you start to see some divergences here. Another place you can see divergence in when you're using the MACD is in the histogram down here. And I know some traders that are using that a lot, meaning that here we have some significant lower bottoms here, but we have higher bottoms here at the histogram. So now we're looking at the bars down here. Here we can see that we have higher tops, and all of a sudden we have lower tops here. And now, of course, it is interesting to see if Apple will turn around. Something could indicate it here. We can see that in the next day. Right now it is the 25th of May 2020, so you can look back on a later date to see if we actually had a turn in price here. You could combine this with let's just grab this tool down here. Of course, you could combine this with some, let's see if we can have it here, a trend line, for instance, here, or you could combine it with other indicators. But let's say, for instance, that price broke this trend line here, and you were pretty sure this was a trend channel that was about to be broken, and you could see some divergence on the histogram, and you might say that is the first warning. So when I get this warning and I get my breakdown on the line here, then I am taking a short, or I am exiting my long position. That could be a way to trade the MACD. There are a number of different combinations here. Now, this is just the default settings, of course, and I know a couple of day traders that are using another setting. They are using 3 and 11, and I think it is 16. So what they're doing is, now we're looking at the daily chart, but maybe they will be down at the 1 hour chart or something like that. So what they're doing is simply they are picking some faster moving averages. So they're picking a 3 and an 11 instead of a 12 and a 26 up here. So they're getting some faster signals, and that's what they are using to day trade their norm. They're not day trading stocks, but using some indices and some forex, and that can also be something that you can play around with. Let's just get it back to the defaults here. 12 and 26 and 9. Here we go. All right. I said I will show you a little trick. And one thing that, at least if you have the paid version of TradingView, I'm not sure if it is possible in the free version, but when you have the paid version, you can set some alerts. For instance, if you want an alert, if this trend line is broken, you can just press this one, go down here. I've shown this in other videos as well. You can add alert, and this say Apple crossing the trend line only once, and when the expiration date would be, that would be a month from now, and you can get a pop-up and send an email and so on. And if we create that here, we can see that a little alert watch clock is coming up down here, and that tells us that there's an alert set here. We can always go into the menu out here to see all of the alerts we have put on. All right, but what you can do if you want to trade with an indicator is that you can actually put an alert on some of the indicators down here as well. So what I do here is that if I, for instance, will have an alert showing me when the MACD is crossing its own signal line, I can just right click on the MACD and we can add an alert on MACD. So if I do that, we can say conditions when the MACD is crossing its signal line only once, and we can create, and now we have an alert on our signal line. It doesn't show up the same way with this little alert bell here, but if you are looking at the alerts, you can see that we have a crossing of the MACD. When it's crossing its own signal line, then we will get an alert. And this can be an advantage if you are putting alerts on 100 different stocks and forex pairs and so on. Then it can be a bit hard to remember which pairs you're looking at or which stocks you are having close to signals on. Then putting on these alerts can actually be a very good idea. So you can do it with pretty much anything down here. You can also say, I want an alert when the MACD crosses the 0 line and so on. There are a number of different possibilities with this alert system. It's actually very neat to work with. So this was the basic of the MACD. What you need to remember is that the MACD is simply just measuring the difference between two moving averages. Then we have the signal line, the orange line here. That is simply just a moving average of the MACD line. And of course you can tighten that or making it slower as well. And then we have the histogram, which is the difference between the MACD line and the signal line. So right now we are out in a derivative of a derivative of a derivative, I think it is, which can make it a bit complex. But I'm not using MACD. I used to use it a lot, but today I'm just using some more simple tools that I have found better, as you know from my Learn My Strategy series. But I know a lot of traders that have MACD on their settings as simply as a standard default. And of course, you need to find your own combination of different indicators and different ways to look at charts. So this is how it is built. You can use the crossing of the 50 line, crossing of the signal line. You can use divergence on the MACD line, or you can use divergence on the histogram. That is the 4 main ways to use MACD when you're putting it on charts. I hope this was helpful, and as always, you can just write your questions in the comment sections below. I'll do my best to answer them as quickly as possible. All right, if you haven't done already, remember to hit the subscribe and the like button down there, and I'll be back soon with some more interesting content. So look out for more videos here from the channel. Talk to you again soon. Take care of yourself and your money out there. Bye for now.